The cost of the war is continuing to strain the American economy. Donald Trump's military operation in West Asia is burdening American pockets. It is waging through tax dollars, rising prices, and long-term economic strain felt by everyday Americans. In just the first 6 days of the war, almost $11 billion were already spent. That translates to nearly $1.9 billion per day. But these initial figures, remember, only scratch the surface. Extend that pace over 40 days of active combat, and the cost alone reaches approximately $76 billion in direct war expenses. But even that figure is only the entry point. The Pentagon has already requested an additional $200 billion specifically for the Iran war. And parallel to this, remember, the White House is pushing for a $1.5 trillion defense budget as well. This level of military spending by Washington has not been seen since World War II. Now, the true cost of the war is not just limited to missiles and troops or equipment. It extends into decades of debt, reconstruction, and care for veterans. With daily expenses running into billions, the financial bleeding is both rapid and relentless. Reconstruction costs add another layer. U.S. bases, logistical hubs, and allied infrastructure all across the Gulf have suffered damage. Academics are also sounding the alarm over the aftershocks of the war. They say that the actual cost of the Iran war could cost American taxpayers up to $1 trillion. Now, while these costs accumulate in government ledgers, their effects are already visible in the U.S. economy. The Bureau of Labor Statistics reports that in April alone, inflation rose 0.9% month to month, pushing the annual rate to 3.3%. Energy prices surged 10.9% in a single month, which is the largest spike since 2005. Gasoline prices, they've jumped 21.2%, while fuel oil rose 30.7% monthly and a staggering 44.2% year over year. Gasoline prices have risen by almost 20%. Now, the aftershocks of this war are only adding hundreds of dollars in annual costs for the average household in America. Transportation, food distribution, and manufacturing have all become more expensive, pinching the American pockets.
Cash flow here is tight, and especially was tight last year at the end of this growing season. We just didn't have a good growing season, so we couldn't pre-buy a lot of those inputs. So yeah, we got hit at the worst possible time because we're trying to buy fertilizer when it skyrockets and when the supply also gets cut.
Fertilizers jump up. It was either 2020, 2021. You know, we saw phosphorus really go up whenever exports were cut off out of China. That was a pretty big blow. We saw like 1137.0 went from that year, I think it was $800 a ton up to about $1,200 a ton. And you know, we've seen this before, but you know, usually there's a reason behind it, and you can kind of see that coming, and this year we just kind of got blindsided.
Now, the economic fallout of the Iran conflict is not just a global concern. A global warning signal has also been triggered. The International Monetary Fund has cut its 2026 global growth projection, impacting even developed economies, including the United States.
Today's shock echoes the 2022 commodity price surge. Then, central banks delivered a successful disinflation without a recession. Can we expect the same outcome now? There are reasons to doubt it. In 2022, inflation pressures were already elevated by post-pandemic support policies. Today, underlying demand pressures have eased, though inflation remains above target in some countries, notably the United States. If the shock remains modest, inflation may be more contained, consistent with our reference scenario.
Concerns over global trade routes, energy security, and possible retaliation are all adding to a sense of unease now. The ceasefire may have calmed things down for a moment, but it hasn't really removed the risk. So this war in West Asia is not just being fought by American forces, it's also being fought by thousands of American voters back home for Donald Trump.